traders, this is Juan Maldonado from the Elliott Wave Street. As always, it's a pleasure to start the week with our free weekly video explaining some of our plans for the week. This week I want to show you a trade that I took last week, and then we are going to check a trade that I'm taking this week on the Aussie and maybe the S&P. Alright, so let's start with this great example. Last week I was looking after this setup in terms of the wave count of the Elliott wave count. We have here the wave 3, this is the wave 4, and we are in the wave 5. Minimum target, the previous low. Last week I was able to trigger the trade at the 173.20. I sell the Euro New Zealand dollar, and then I leave my stop loss at the 173.20, so I was with a 30 pip stop loss. Then I take my profits at the 171.50 area right here. The price went a little bit lower, but I booked 180 pips on this trade. This is the Elliott wave count, something basic, but I'm going to show you the decision process using value, using volume profile, and using VWAP. The price went down already. This is the wave 1 in terms of Elliott wave, and we are in the wave 2. So once we have the retrace, I'm going to sell it again. But let me show you what I did here. I'm going to add the volume profile, visible range, and we are going to add the VWAP. Alright, let me increase a little bit the VWAP so we can see this thing better. Okay, there we go. Great. So when we are in the corrective wave, this is the wave 3, right? And all this price action is for the wave 4. So I'm going to do the value analysis just for that area. So let's go to the 15-minute chart, and I'm going to just have here on the screen, let's go to the hourly actually. There we go. Just to have in the screen the corrective wave. So here is the wave 3 and here is the wave 4, right? So I'm going just to leave the value area for the corrective, so we can have our profile. Okay, there we go. Fair enough. So as you can see, this will be the wave A of the wave 4. This will be the B wave, a 3-wave sequence, and the C leg up. And I triggered my trade last week at the 173.20, right here. And yeah, the price did a retrace after that, and the stop loss was at the 73.50, so we were fine. But look, we were outside the value area. When the market goes outside and then it starts showing reversal signals like this one, also we have the resistance right there. So we have price outside the value right here, outside the value, and price started to have trouble and reverse immediately back to the value zone. This one was a beautiful trade, a high probability trade on the Euro New Zealand. But also, on that day, when I was looking for the trade, let's go to the 15-minute chart. Right there, when I take my trade, we were far from, I take it actually the trade here, during this candle, 113.20. And the price started to move higher. It didn't hit my stop loss, but it was far from the VWAP. And we have a close below the VWAP. then we have a bounce, then we have a second close below the VWAP. And this is a double top, right? Double top formation. Here we have a bearish engulfing candle. The price started to go down. I just hold to my trade. I hold it. And once it started to move in my favor, I started to tighten the stop loss. And finally, at the 171.50, I take the decision to take out my trade with 180 pips. So small risk, big reward. We need a lot of patience in order to find these trades. Let's have a look now at the live markets. I just wanted to share with you my experience on that trade. But on the live markets, here we have the Aussie dollar. On the Aussie dollar, price already went down, and I believe this is the wave 1. And we are now building wave 2. Right? Wave 2, it is likely to be done at this area of the 76.10 area, because we are having the crown pattern similar to the head and shoulders, just that the right side is lower than the left one. And we have that potential reversal zone right there. Also, we can add the trend line. We have the breakout of the trend line of this wedge. And I'm looking at this low, 74.60. My trade plan on the Aussie dollar will be waiting for the ABC back to this area, and here the 76. Once I have a reversal candle, could be an evening star, could be a shooting star, could be a bearish engulfing candle, anything that confirms that the market wants to reverse, I'm going to sell it. And I'm going to target the previous low. And I'm going to leave my stop loss above the high. That's it. Simple trading plan, right? Now let's have a look at the S&P that is more complex than the Aussie dollar. The S&P has been climbing and already hit the previous high. Actually, I'm planning to move my wave X a little bit to the right, but for the trade setup, it's not going to matter if we make this small adjustment on the wave count. But more than that, look, this candle on the hourly chart is extremely important because it's leaving a long tail on the upside. And that's telling that buyers couldn't find more buyers at those levels. So if we have a candle close, a red candle closing below the shooting star, that's going to be a trade, that's going to be a sell, and we can leave the stop above the high. That would be an aggressive entry. Or if we want to add a little bit more of a buffer confirmation, we can go at the lows of this consolidation area. Right there, we can sell it in that case. Right? We can go short right there. So we are adding filters because right now the market is in a bullish trend, and so far we only have green candles, and it can continue making higher highs. If that happens, in that case, we will watch for another reversal. But you can see how important it is to wait for a signal, because if we just trade against the trend, is not a good idea. We need to wait for the validation. The price right now can continue higher, no problem there, right? But in order to confirm the short trade, we need to have the candlestick reversal pattern, at least, or a breakout of this consolidation area. That's where most of the stops of the institutional guys are when they start moving the stop to in case that the market reverse. Makes sense, right? So if it goes there, we have a higher chance that price will start to do in the leg down. All right, traders, that's the plan for this week. If you want to get our membership, receive the daily analysis every day with trading ideas, with charts, with everything. Visit ElliottWaveStreet.com right now. Click on the membership tab, and here you are going to find all the details. You can take our trial, 1 month just for $19, the first month for Forex, stocks, or the full access. And here you can read all the contents that we provide daily. You will get immediate access to our membership with your username and password. You will get access to the Elliott wave analysis on all these instruments and also the daily video. Please have a great start of your week. Happy New Year. I'll see you inside the membership. Take care. Bye-bye.